Hi, I'm Catherine McQueen and welcome to Pink Diamond, the show that digs deep into the pink sheet and small cap markets to find diamonds in the rough. And today we're taking a look at a company that hunts for diamonds in the rough itself. Founded in 2005, Gladstone Investment Corporation is a private equity fund focused on acquiring mature, lower middle market companies with attractive fundamentals and strong management teams. It has a market cap of $431 million with annual revenue of $59 million and gross profit of $38 million. They don't invest in startups, preferring the manufacturing, consumer products, and business services and distribution sectors. Gladstone typically invests up to $30 million of debt and equity into each transaction, and most of their invested businesses are profitable market leaders in stable industries with strong management teams. The firms they focus on are typically US-based with between $3 to $20 million EBITDA, proven business models, stable cash flows with minimal market or technology risk, and good long-term client relationships. The fund typically holds its investments for 7 years and exits via sale or recapitalization, IPO, or sale to a third party. It sounds like they should watch this show. Now, when it comes to profitability, Gladstone has a return on assets of 5.8%, which is among the best returns in the industry, outperforming 85% of its peers. Furthermore, its return on equity is 8.84%, outperforming the industry average of 6.68%. The firm's profit margin of 55.29% is extremely impressive too. Valuation-wise, the firm has a price-to-earnings ratio of 14, forward price-to-earnings ratio of 16.22, and price-book ratio of 1.07, all of which point to a correctly priced firm. However, when comparing the enterprise value to EBITDA ratio of Gladstone to the industry average, the firm appears to be valued rather cheaply. From a growth perspective, earnings per share grew an impressive 28.4% over the last 12 months and by close to 5% when averaged over the last 5 years. Looking ahead, earnings per share are expected to grow by 3.2% on average over the next 2 years. Revenue is also surging, with the firm growing by 8% last year and 9.3% on average over the past 5 years. Gladstone's debt-to-equity ratio is 0, and its Piotrowski F-score of 7 suggests that the firm is in good health. Looking at the technicals, we can see that although the short-term trend is negative, the long-term is still positive. The 200-day moving average has worked extremely well in the past as both support and resistance, while the 50-day capped a move higher in January. According to Dow theory, a series of lower highs implies participation in a downward trend, and that's what we are looking at now. Purely from a technical perspective, traders will be looking for opportunities to sell if the price goes below $13. However, looking at the overwhelmingly positive fundamental narrative, this could provide a good opportunity to go long. That's all we have time for now, but as always, make sure you do your own due diligence before making any investment decisions. Until next time.